I mean, even if inflation comes down with a weak economy, that's bullish for gold. But if inflation goes up, that's bullish for gold too, as long as the Fed stops fighting it, which eventually they have to do. Because if inflation keeps going up, the economy is going to collapse because the Fed can't keep raising rates. It's like a game of chicken. At some point, the rate hikes are too much for this overly indebted economy to bear, right? We are all levered to the max, right? It can't happen. The Fed is in a no-win position. And when the Fed can't win, gold can't lose. That's the point. So if you want to bet on something that can't lose, it's got to be gold. I mean, there are no guarantees in life, right? I can't guarantee anything. But I mean, as far as the closest you're going to get, I don't see a scenario where gold doesn't go up. That doesn't mean it can't go down first. And I think if gold goes way up, the gold miners will go up even more. So I want to have a bet. I want to have a big bet on that outcome because I think the payoff is really skewed. I mean, even if somehow I've read this wrong and I lose money, I think those losses are small in comparison to how much I can make if I'm right. But that's the nature of speculation. And you just don't speculate with more than you could lose. That's how it is. Yeah, you can't put money you can't afford to lose into the mining stocks. But if you have money you can afford to lose and you're willing to risk losing it to make a lot of money, then you got to do it. I think it's the best risk reward trade for my money that's out there. That's why I got so much of my own money in it. So if you want to buy more gold and silver, call up Schiff Gold, right? And talk to the guys there. I mean, it's a great time. I think the premiums have come down now too a bit. Because sometimes, you wait for gold to go up. It's hard because not only does the price of gold go up, but the premiums on the coins you want to buy go up too, right? So if you're trying to buy at the same time everybody else is buying, you end up paying a lot more. So it's a little quiet right now. It's a good time to buy, right? A lull before the storm. So try to pick up some gold and silver. Go to, at schiffgold.com. And if you want to do a more leverage bet, buy some more of these mining stocks. Call the brokers at Euro Pacific Asset Management. Look up the Euro Pacific Gold Fund, or set up one of the managed accounts. We have a gold-based managed account that Adrian Day manages for us at Euro Pacific Asset Management. All kinds of junior mining stocks. Get them while they're cheap. Get them while people are dumb enough to sell them. So any kind of weakness, and I think this is a little short-term weakness, that's when you want to be a buyer, right? You want to take advantage of the selling to top up your positions if you have positions, establish positions if you don't have them. And even all my other strategies, like my value strategy, still incorporates an allocation towards gold. But, the dollar's gone up a bit. Stocks have come down. I think stocks have a little bit more room to fall here. But that's a good thing if you're a buyer. But the gold stocks could turn on a dime any minute. I mean, that's the thing. Every night I go to bed, I don't know if that's the night I'm going to wake up and gold will have exploded, because one day that's going to happen. You don't know when it's going to happen, but I sleep much sounder knowing that I've got this position on. I wouldn't want to go to sleep not being confident. I don't have confidence in the dollar. I don't have confidence in a lot of things, but I have confidence in real money. And so I sleep sounder because I've got it. So Schiff Gold for physical gold, and Euro Pacific Asset Management, Euro Pacific Capital, if you want to get positions in the mining stocks. But what I do know is you can't hold a bunch of dollars, even though the yields have gone up. Now you can get 5.25%, 5.5% on a money market. It's tempting to think, oh, that's a good return. You have to realize that it's being undermined by inflation. And that inflation rate is going to accelerate much quicker than people think. And so all of a sudden, all that interest that you earn gets wiped out by the inflation tax. So to avoid that tax, you have to avoid the currency that is being inflated, which is the dollar. And, speaking about inflation, I just was watching. And I wish because I can't tell you guys, where to watch this interview. It was on YouTube. You could probably Google it. But some reporter, and I think I found out about it. Maybe somebody tweeted out the clip. But a reporter was asking Jerome Powell, why 2% inflation? Like where'd you get that number, right? Why 2, right? Why not 1.5 or 2.5, right? What's so magical about 2? It's a legitimate question, right? Because we need 2%. 2% is our target. Okay, you know, where'd you get that target, right? Because there is no official. It's not. There's nothing in the Federal Reserve's like charter that says that we need 2% inflation. They have a mandate of price stability and maximum employment, but it doesn't say 2% inflation. In fact, 2% inflation to me can't be defined as price stability because stable means remaining the same, right? From year to year. So if your goal is price stability and prices go up 2% a year, that's not stable. Now you could say it's a stable increase in that the increase is consistent and predictable. But if something is going up every single year, you can't define that as stable. Stable would be remaining the same. So clearly the Fed was not created to engineer a 2% inflation rate. So why are they doing it? Where did it come from? And why 2, right? Why not some other number? And the funny thing about it was Powell had no answer. That was hysterical. So Powell's answer was, well, central bankers around the world just agreed that 2% was the number. And so the reporter said, well why? And he basically said, well, because they did. We just all decided to agree, even though he wasn't part of the agreement, because supposedly that global agreement around 2%, he said, well, that's just the number that everybody decided is the number they're going to use. But why are they using it? Right? What's so special about it? He couldn't come up with a reason that 2% was good. I mean, why is it good? I mean, it's like, well, 1.5 is too low and 2.25 is too high. I mean, what is the reason? Why is an economy with 2% inflation? Why is that inherently better than an economy with 1.5% inflation? I mean, if 2% is good, why is it 1.5 better? Now, is he going to argue, well, that's not enough? That's not a big enough increase in the cost of living? Well, why not? Well, what about 1 3/4? Is that enough? No, it's got to be 2. Well, what about 2.25? Oh no, that's way too much. 2.25 would be too high. But how do you know? They can't know. They don't know anything. 2% isn't even really the target. It's all BS. It's only because they were below 2% that they started claiming it was a target. That's why. They had all these central banks that had inflation below 2%, and they wanted to justify printing a bunch of money. They wanted to stimulate the economy, or they wanted to bail out governments. They wanted to monetize their debt. And so they came up with this idea that there's a 2% inflation target because they were below it. That's the only reason that was the target, because they were lower than 2. And they said, oh, this gives us carte blanche to try to push up the inflation rate because we've now claimed that there's a target of 2. And in order to justify that target, they had to make up this BS that it was somehow better for the economy if the inflation rate was 2% than if it was 1.5. But I kept pointing out the absurdity of such a contention, especially when Powell said we need to have inflation averaging. We now need to go back and make up for all the years that inflation was below 2%, but we have to have it above 2%. Who wants to make up for the fact that prices didn't go up more in the past? Because one of the justifications for, the BS about why we need 2% is they kept